Hello, for those of you who are completely brain dead, today is a presidential election, which raises a question in terms of investments. Does it really matter which party is in office? Today, let's take a quick look at that. So if you just look at the market, it is somewhat predictive of who will win, especially if you look at the 3-month numbers here. You're welcome to pause this and take a bigger look at it. But in general, if the market is up in the 3 months leading up to the election, then the incumbent party wins. And if it's down in the 3 months leading up to the election, then the incumbent party loses. I would like to think that this is probably less of a reflection on the party and more of a reflection on the economy. If the economy is doing well, the incumbent wins. If the economy isn't doing so well, the incumbent party loses. Another way to take a look at that is in a chart here, and you can kind of see that latter half, kind of those months leading up to the election. There is a bit of a divergence between the market when the incumbent party wins and when the incumbent party loses. Now, in terms of what the market thinks, kind of leading up to the election in general, when a Republican is leading in the polls, the market goes up a little bit more than it does when a Democrat is leading in the polls. You can see that data here. When they're tied, the market is essentially flat or basically that down slightly, and the tied in the polls thing happens very infrequently. Now, when the person is actually in office, that kind of flip-flops. So kind of once the person is in power, then the market seems to do better under Democrats than it does during Republicans. Obviously, that's not always the case, and things vary, and it varies by market class. But in general, you can see that the numbers here are positive, which is not surprising given the long-term nature of many investments. Now, we can also see here that the market reacts a little bit differently when kind of a new president is elected or there's an incumbent president elected. So I think in general, this seems to indicate that the market likes kind of certainty. They know what the president has been doing, and they can expect more of the same as opposed to some kind of unknown change going down the road. And that is how it has been throughout history there. Now, in general, we can see that the market generally does just go up, 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 up. So doesn't seem to be too different between presidents because the market does in general go up. Now, of course, Coolidge, kind of that Nixon Ford era, and Bush 2, the market was kind of sideways over the full period of those presidencies. But in general, the market just goes up regardless of who is in power. Now, of course, people often talk about, the other branches of government. Do we have a president, a House, and a Senate? They're all aligned in terms of political affiliations and the market's reaction to that. So here we can see that in general, the market likes it when Republicans are totally in charge or when there's a Democratic president and there's some kind of check and balance there in terms of Congress. That's at least what we have seen historically. Another way to look at this, of course, is the market seems to like that split Congress better than any other type of arrangement within those two branches of government. And this is a little bit interesting, not really so much about the returns of the markets, but how people behave. So this is interesting to me in that during an election year, people get very conservative. They put more money in money markets than they do in equity funds. And then after the election, that flips. Now, of course, in general, that is not a winning strategy. In general, the more fully you invested you are, the better. Of course, these are for people with long-term horizons. Now, ultimately, I question any of this in terms of its statistical significance. If we look at kind of the periods we've been looking at here, we only had 22 presidents in this kind of market era, and 22 data points is far from sufficient enough to draw any kind of statistical significance. I would argue rather that the market and the economy are functioning on their own, and that a lot of these results are because of how the economy and markets are doing and not a reaction to which particular party is in office. Anyway, hope you found that interesting, and happy election day. Thanks so much.